Markets trade flat with a positive bias. Sensex trades above 72,100 while Nifty choppy above 21,800.
Well, Tata Motors stock in focus jumps over 7% on the back of strong Q3 earnings. The company's revenue witnessed a 25% uptick while margins expanded substantially.
And Paytm woes continue as stock hits lower circuit for the third straight session. The company wiped out 20,485 crore rupees market cap so far.
Well, among the stocks in focus, you have State Bank of India reported its Q3 numbers on Saturday. The bank reported a 35% drop in net profit, showing an improvement on the NPA front though.
Implementation of the Cashless Everywhere initiative may prolong the working capital cycle from 45 days to 60 days. That's an NDTV Profit exclusive.
Welcome, good afternoon. You're watching NDTV Profit. I'm Hersh. With me is Smriti. Over the next 30 minutes, we'll give you all more insights, more IQ, and we'll focus on certain specific stocks. But first off, let's talk about the markets itself. You're seeing the Nifty, which is up around 1/3%. Nothing much to complain about. You've got the Nifty trading in approximately 130 to 200 point kind of band. In terms of where the contributories are, you have the likes of Tata Motors, which is up 6.5% on the Nifty. Within the Nifty contributories, if we can have the heat map there to give more perspective on which are the top buzzers. But yeah, there you go. You have contributories, Tata Motors, Reliance, Coal India, Power Grid leading the pack, up nearly 4% in trade today, and that's a big positive as well. In terms of the negatives, you're seeing Bharti Airtel, Bajaj Finance, Kotak, UPL, all of which are contributing negatively on the Nifty 50. In terms of the mid and the small cap indices, the broader markets largely outperforming the Nifty in trade today. That's been the theme, continues to be the theme. 2/3% higher on the mid cap, 1.5% higher on the Nifty small cap. Let's look at sectors. If we can have the sectoral chart in terms of sectoral indices, the Nifty Bank absolutely flat. But outside of that, the Nifty PSE, that's been leading the pack, oil and gas as well. Nifty Energy up to 2.4% odd. You're seeing Nifty Pharma also getting traction, good traction today, 2% higher on the Nifty Pharma as well. Nifty Realty gaining around 1.5% as well. So all of those on the positive side. On the negative, not much to talk about, largely flat with a slight negative bias when you're looking at the Nifty FMCG, the Fin Nifty as well as Nifty Consumption. So that's the theme, at least at the moment, Smriti.
Right, but the stock in focus today will be TD Power System. It came out with its third quarter results yesterday, and the net profit jumped 49% year on year, while the revenue and EBITDA rose about 18 and 19% respectively. To add more context and to break down these numbers, we're now joined by Managing Director of the company, Nikhil Kumar. Hello and welcome, Nikhil. Thank you for taking the time out.
Thank you. Good afternoon.
Good afternoon. Sir, let's start off with the numbers and the guidance that you've given. You've given a guidance of about 1,000 crore addition in the top line in the for FY24, if I'm not wrong. And you've also given, according to your order book, it's about 1,147 crore thereabouts. Could you give us a timeline of execution of this order book?
So the order book would be divided into two parts. There's a long-term order that we have for a railway customer that's about 450 crore, and the balance is our business, which is around 700 crore, which would be executed in the next 12 months. And the railway order is for 4 years, so it's about 100 crores per year for 4 years. So say about 800 crores will be executed in the next 12 months out of the 1,150 crores.
All right, and in this quarter, November, you also got a nod to set up a facility in Karnataka. Could you tell us when will that begin, that the production there will begin, and how will it contribute to your top line as well?
Well, we are adding capacity. So we have two plants already near Bangalore, and we are putting up a third plant about 70 kilometers away from Bangalore. And we're basically adding capacity to existing lines. We want to take it, we have capacity right now to about 1,300 crores, 1,400 crores. Next year, we are already projecting around 1,200. So we're coming to the limits of our capacity with the existing plant. With the new plant, we'll be able to go up to 1,800. That will go on stream in phases, but the first phase will start from Q3 FY24.
Understood.
FY25, next year.
Sure, understood, Nikhil. Hersh also joining in. If I can try and break this down further, if I understand correctly, 1,200 crore on the top line front when I'm looking at FY25. Thereafter, if I am talking about these new capacities being added, so where should top line go by FY26-27? How quickly should it go towards 1,800 is what I'm trying to understand.
We have projected an average increase of about 17-18% on the top line for the next few years. And, we are focusing our business on export, which is around 60% of our sales. Domestic will be about 40% of our sales. And EBITDA margins and net profit will grow at a higher rate compared to the sales growth. That's because we are also investing in not only in the new plant and a lot of automation, and we'll see operational leverage coming in from higher top line. So profits will grow faster than top line.
Understood, got it. And therefore margins should be above the 20% mark straight off the bat by FY25. Is that fair to say?
Yeah, year-on-year increase definitely.
Understood, got it. When it comes to EBITDA, I'm talking about margins, sir. So margins will be above the 20% mark, FY25.
Yeah, the net profit would be increasing more around 20% plus per year for the next few years.
Understood. Yeah, that makes sense. Sir, just with regard to kind of traction that's there in the economy, how is the traction currently? Of course, power has been a segment where there has been plenty of focus. And, when I'm looking at your order book, of course, maybe 40% is railways. But outside of that, there are plenty of other ancillaries which you are a part of. So how is the order book really piling up, and how are you expecting that traction going forward?
The power sector in India is, we have a shortage of power. And with economic expansion taking place the way it is, there's going to be a shortage of power going forward also for the next few years. So industrial capacity expansion is always going to be accompanied by a large capital power plant. Say in the range from, let's say, 5 megawatt to, let's say, 100 megawatt. And that's the range in which we play. We are really in the large industrial capital power plant business. We make generators for steam turbine and for steam turbine application. Internationally, we do a lot of business in hydro. We do a lot of business in gas engines, gas turbines. And those sectors are driven by other factors. There's a shift for more and more renewables internationally. Gas has also been classified as a renewable source of energy. So there's a lot of investment taking place, shifting away from coal and nuclear into these sectors. So we're seeing a tailwind also coming for us from international markets because of the shift towards more renewables. So in general, both domestic and exports, we have tailwinds from a macro point of view. And that I see at least going forward for the next 4 or 5 years. I see the cycle playing out very positively for us.
And sir, thermal, there's a lot more kind of visibility in the sense that how much there's going to be an increase in the thermal power generation. So does that kind of impact your financials, thermal versus renewables?
Our business is industrial captive. Let's say there's a cement plant which needs a 30 or 40 megawatt captive power plant, right? A single unit. That's the kind of business that we are in. We're not in the utility sizes, which is, let's say, 400, 500 megawatt, which would be a typical size of a thermal power plant. In general, I can say the capacity addition taking place in India by large thermal, large nuclear, or other renewable sources is not sufficient, is not keeping pace with the demand for power. So industrial applications or industry use will continue to see shortages, and they will continue to invest in capital power plants in this foreseeable future in India.
Sure, sir. Sir, trying to understand where are we on capex? Your debt is near zero. How much of capex needs to be put up over the next couple of years, say through FY26, and how are you expecting to fund that?
We have cash in the books around 215 crores. So we'll be investing over 120 crores in capex, 40 crores this year, 80 crores next year, and we're not going to take any debt. And then after that, we'll have about 20-25 crores of maintenance capex per year, which will be approximately equal to depreciation. So we're not going to stretch ourselves into going into debt, and we're going to be conservative in how we invest our money. There's also going to be cash generation every year. This year we're projecting around 115 crores of net profit. So that will replace the money which is being invested in capex. So we're being pretty conservative in how we're looking at our cash.
Fair point. Thank you so much, Nikhil, for joining us and for all the comprehensive answers that you gave us. But now let's shift focus to Tata Motors. It came out with a spectacular set of results, and it's up about 7% in trade right now. That's on the back of the numbers, and the company continued the streak of reporting profit for the 5th straight quarter. Listen into what PB Balaji, the CFO, had to say regarding the sale outlook for EV and CNG powered models going forward.
If you would expect EVs, you would like to see this cross the 25 to 30, be in the range of 25% to 30%. That's what we are targeting as far as FY25-26. That time frame is concerned. The next 1-2 years, that's how we should see that. And that's what. And the key focus area for that is to ensure we develop the market in terms of exciting product offerings, more products, more chargers, more features, and that's how we should expect to see the penetration rise.
All right, that was the management of Tata Motors, but let's also look at LIC. It's up in trade today, and Hersh, tell us what is the reason behind this kind of jump today, about 6.5% there, and talk to us a little bit about the valuation of the stock as well.
Well, yes, absolutely, Smriti. So today's jump, not really sure, because just the way in which the stock has moved over the last couple of months, it's been a very stellar rally coming in from LIC. So I'll talk about the longer term picture, the bigger picture of where LIC is currently at. You're looking at valuations now very close to 1 times EV is where the current price to EV is currently at. Embedded value is largely the value, intrinsic value or the discounted cash flow value which one takes for insurance companies, and LIC is very close to 1 now. You're looking at a peer group which is valued at roughly 2 to 3 times price to embedded value, so substantially more expensive. LIC was listed at 1.1 times. So of course the patient investor has just about started making money, Smriti, on LIC, and that's one thing to cheer about. But the other piece is LIC has taken several initiatives since listing, since that 1.1 times price to EV valuation that the government gave it as well as merchant bankers gave it. Several steps taken. One is they're moving more towards non-par. They are releasing and launching more products in that space. They are pushing more products there. What they are also doing is they've moved, therefore, their profitability, their margins, as you would call it in insurance, more from the sub 10% to the over 15% mark, and they're consistently staying there. So quite a few positives which seem to be playing out. Of course, the low free float is not really helping its case, but at least at the moment, LIC on a tear over the last couple of months, it's nearly doubled, and that's a good piece for investors.
Well, a little bit expensive there, as you mentioned, but we'll quickly slip into a short break now, but we'll talk about a lot of other stocks on the other side. Stay tuned.
Welcome back. You're watching Market IQ on NDTV Profit. Let's quickly take it across to Smriti. She's got us a preview with regard to Bharti Airtel. What can we expect from those numbers?
Well, you rightly mentioned it's going to come out this evening, and we're closely tracking it. Now, if you look at the margins, that's supposed to be a little capped for the telecom sector, specifically Bharti Airtel and Jio, which we saw that it was a gap because of 5G spends, but that's going to moderate in the next year. So this time as well, that's going to be a factor, which is why margins will probably be flat in the third quarter. Another thing that's also restraining the margins is the devaluation of the African currency, which is Naira, and that's been going on for a couple of quarters as well. So that's where we're at on the margin front. But if you look at the revenue, that's expected to rise about 3.5% to 38,300 crores. And if you look at the net profit, that may also increase about 36% this quarter, around 2,800 crores or thereabouts. Now, Bharti Airtel has been gaining subscribers as Vodafone Idea, its competitor, continues to lose. So ARPU, the average revenue per user, is expected to rise about 1.1% this quarter from the previous quarter, around 205 rupees from 203 rupees. So a decent kind of uptick in the ARPU there, and the company is targeting about 500 billion market opportunity with its enterprise operations. Now, the company also expects 80% of corporates that will be using 5G in the next 3 years. So a lot of positive out there for the company as well.
Understood, Smriti. Also, the stock in slightly on the negative side today. You're seeing a 2.5% fall on Bharti Airtel. So some amount of negativity creeping in over there. But on to an NDTV Profit exclusive. Now, the implementation of the Cashless Everywhere initiative may actually prolong the working capital cycle. This is for insurers from 45 days to 60 days. We have Monal with us who's going to give us more details and perspective on that one. Monal.
Thanks, Hersh. Well, yes, the initiative that was introduced on Jan 25 is expected to have some impact on the insurer's short-term working capital cycle, but it's going to have quite an impact on the hospitals front. So the idea is that the working capital requirement for hospitals may go up to 60 days from currently 45 days. And this is based on our conversations with certain hospitals and industry specialists. So the idea is that there'll be a shift in the payer mix. So typically, right now, insurance and government schemes combined make up for 50 to 70% of a hospital's revenue, depending on the size of the hospital and the geography. This ideally will shift, and there'll be a higher dependence on insurance contracts. So let's look at the larger numbers. If we were to look at the entire health insurance claims in FY23, they were close to 71,000 crore rupees. Of this, only reimbursement claims, which would essentially mean that somebody were to avail treatment and then claim a reimbursement on the insurer, were close to 25,000 crores. Now, if this were to move to cashless, we're looking at 25,000 crore rupees of working capital that will now be settled based on an insurer's settlement cycle period. So that's going to be quite an impact. And there's another side to it as well. There could also be an impact on the ARPOB, which is the average revenue per occupied bed. This would mean that if reimbursement rates are favorable, that is the understanding between the hospital and the insurer is favorable, it could have a good impact. Right. But if there's like a further negotiation, then it could be a negative.
Got it. Now let's shift focus to the primary markets. My colleague Sajit Mangat spoke to the management of Rashi Peripherals on their upcoming IPO that is set to open for subscription on February 7th. Listen into how the board plans to use the proceeds from the IPO.
Our business is a working capital driven business, and 475 crores out of this will be used to repay the debt on the books, and the balance will be to pay off the creditors.
So, give me a model of this business, because you are into peripherals, especially into ICT business, basically one of the leading distributors of ICT in the country. So how does the business model work? And when you say that it's for working capital requirements, where does it come into play?
Yeah, so I think I'll try to give you a snapshot of Rashi Peripherals first. So, incepted in the year 1989, Rashi Peripherals is now a 34-year young company. We are not only the largest, but also the leading and the fastest growing ICT distributor in the country. When we say ICT, basically it's IT. In common parlance, anything that is related to IT and IT products. Currently, we distribute 52 global marquee brands. Some of the big leading names that I can highlight is Asus, Nvidia, Dell, HP, Lenovo, Western Digital. These 52 global marquee brands, we are currently distributing from our 50 branch offices with warehouse, with service center, which is an unprecedented infrastructure in India. I repeat again that we are the company which has 50 city presence with office plus warehouse plus service center, so that our customer gets a 360 degrees experience of pre-sales, sales, and the post-sales and warranty cycle as well.
Rajesh, when you say that you are distributing this, it's not just the finished products, but also hardware parts also, is it?
Yeah, so there are two parts of the business, the verticals we have in the organization. One is called as the LIT business, where we are more parts of products like keyboard, mice, CPU, graphic cards, all this, which accounts to 46% of our top line. And balance 56% is PES, which is personal devices, cloud computing, where more of laptop, server, storage, all these products come.
Rajesh spoke about the products which are there in there, but I've seen your peers in the industry, whether it's Reddington or Ingram, who are the peers for you, they are into mobile distribution as well. Why haven't you entered into mobile distribution?
Yeah, so if you see the landscape of the IT industry and the mobile phone, smartphone industry, it is an equal size of the business opportunity in both the segments. That's the size of the volume of both these industries. With the working capital driven organization, the intensity of the working capitals is extremely high. And with limited raw material of capital that we have, we chose to fight our battles in the IT industry and become an expert distribution company in the field of ITC only.
Sure, and to understand that whole conversation, please head on to our website, ndtvprofit.com, where we've uploaded a slice of that entire conversation with Rashi Peripherals. But with that, we're completely out of time on this edition of the show. From Smriti, myself, everyone who puts the show together, thanks so much for watching.